Hi everyone, this is Paul Lange from Discipline Training Strategies. You're about to hear an hour-long event that was presented live to the free members of DTS. This is called Increase Your Odds, and I'm going to present 7 different concepts that I feel are key, important concepts in increasing your odds. Naturally, you have to know how to read charts, but the point of this presentation was whatever level you're at, these are all things in addition to your strategic concepts that can get the odds better in your favor. If you enjoyed this event, be sure to visit the DTS Free Stuff page where there are lots of other events, Trading League videos, and a lot of other educational videos. So sit back and enjoy the event. Good evening, everybody. Sound check, everyone. It is not even 5 o'clock yet. It's 30 seconds till 5. I started 30 seconds early because last time I did this, I was 30 seconds late, and I'm never late, so I thought I would give us a quick little start here. I'm going to get right to it as usual because I have a full hour of things to do. Tonight is called Increase Your Odds, trading or investing any time frame. It doesn't matter what time frame, doesn't matter what you're trading, whether it's futures or stocks or Forex, whatever it is. I have done, on the Platinum page there, I think are 110 or 115 educational events. And then that doesn't count a couple of recent ones, it doesn't count the impromptu, so I've probably done 130 events. These are just free events that do not touch on the seminar concepts. And I'd have to say I've never actually just gone out and repeated one. I think that's rather amazing when you think about it. Just stop and think about that for a minute. 120 to 130 one-hour educational events that don't even touch on the real topics of trading. Isn't that something? It just kind of tells you what there is to, to absorb out there in a sense. Never really repeat it. Now, I bring that up today kind of because today it's called Increase Your Odds, and obviously I'm not going to come up with some brand new things out of the box. These are going to be some highlights and some emphasis on things that I think are really, really important. Well, thanks, Jack. Well, you know what, I actually put them in tonight because one of the things I want to emphasize has to do with today, and I actually have an email coming out about it. I didn't want to trade today, so I took them fairly quick. I made twice a day's goal on it, but I didn't get all of JWN, and I think Mirnas had a trade on GPS that was huge. I didn't do it all. I wasn't sitting around more than a few minutes. Well, we can talk about that later. But thanks anyhow for bringing that up. Appreciate it. I have pulled out a few things here, so let's get going. This is a slide that you get initially. So you know that, just blah, blah, blah. And I mentioned in a note because I didn't want people to think, well, I never do this. I didn't want you to think you're going to come here and hear, oh, if you want to increase your odds, just learn how to trade and learn technical analysis. Obviously, that is the first step. If you've listened to me for more than 10 minutes, you know not what I think and not what I believe, but the absolute fact is that the only way to make money in the market for 99.999% of the people is through technical analysis. And the only way to make money with technical analysis is to learn it at a very high level, okay? So I said that. That's not what tonight's about. Obviously, that's the first step. This is kind of directed to people that, okay, you're saying to me you think you know the charts. You think you know technical analysis well enough. Great. Okay. Let's talk about some things that can help improve you, whether you are a perfectly A-plus trained trader or whether you're a B or a C trader or whether you're just kind of learning. All these things are good things to help, right? It goes without saying that you have to know technical analysis at an A level before you can even really have this conversation. So here's the list, and look what I did. I X'd it out so you couldn't just get this and run away. Understanding proper something has a far-reaching impact. Understand the proper use of, I don't know. Understand blanking and use of versus non. Understand the advantage of trading, blah, blah, blah. I'll blank is a necessary part of your toolbox. Learn what it means to look for, blah, blah, blah. And your odds diminish to 0 if you do not have, oh, I want to know that last one. That's a good one. I don't even remember these. So as we go, I will unveil them for you one at a time. Let's begin. First one, understand, what does that say? Proper share sizing has far-reaching impact. Let me emphasize again. Tonight, there can't possibly be something brand new that you've never heard me say in the other 130 events. What tonight is increase your odds. I'm pulling out some things that I think have far-reaching impact that I really want to emphasize. There are so many things I feel in trading, and the reason I have a right to say this is because I work with so many people, from people who are not part of DTS that just ask me questions, to people who kind of want to be part of DTS and don't want to take a seminar, to people who are in the seminar program, work with all the different levels. And I know a lot of stuff just gets the yeah, the yada, yada, yada is art here. The yeah, I know that, I know that, I know that. But you know what? You don't really know it. And that's the problem with a lot of these topics is they're all they give lip service to them and, oh yeah, I understand that. But you don't really understand it. Everybody just wants to get to, oh, show me a chart, show me the magic strategy, let me start raking in money. That's all people think about. And you can't do that without having all the proper foundation. So the first one I pulled out here is the understanding proper share sizing has a far-reaching impact. Notice that wording, that's number one. Far-reaching. These are in no particular order, by the way. I'm not saying that this is the most important one here. As a matter of fact, the last one may be the most important. To know and not to do is not to know. Well, yeah, very good. Yeah, that applies probably to a couple of these slides here. It has a multiple prong effect. Discuss learning, discuss management. You have no idea. You have to learn to lose. Proper share sizing, the reason this is such a big deal to me. Now, this is where, people will just say, oh, lip service, blah, 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 go to the next one. I understand this. Risk too much money, you lose too much. It's way beyond that. Obviously, share size to the trade that you're doing and, all the basics. Most people know this, and every trade should have a similar risk. A lot of new people maybe don't know that. But I'm not just saying that you share size to lose X amount on any trade. I'm saying that working up to the proper share size is way more important than you think. And it's not just a matter of, oh, yeah, Paul, I know if I start out risking too much money, I'll lose quickly, blah, blah, blah. It's way more important than that. Does anybody know what to me is probably just as important as, making sure you don't lose too much money when you start? When you risk too much money up front, what are you depriving yourself of? Does anybody know that answer? Yeah, you're hitting all around it. The word I have is just learning. You're depriving yourself of the ability to learn. The charts are teaching you all the time. Right, Rob, exactly. The charts are teaching you all the time. And when you are sitting there with big share size, you're focused on one thing. Oh, should I take some of this? Should I protect this profit? Should I minimize this loss? And you're not looking at the chart, and people don't go back and do this. So the effect of having the wrong share size permeates everything you do. It stops you from learning immediately. It also prevents you from ever creating confidence. The secret to getting rid of all the emotional problems is building confidence, which you get through learning charts properly and then building your confidence through incremental risk progression. In other words, you keep learning and building, making a little money, very small amounts, and you feel very good doing that. And then as you work your way up to bigger amounts, it has very little effect on you. Few people do that, and I think that I would attribute improper share sizing to be one of the top killers for new traders. You can believe me or not believe me, but that's just from my experience. There is a video that actually addresses this topic to some degree. It's on the free stuff page. It's in the Hall of Fame. So just click on that and look at it later if you haven't seen that one. I imagine you've seen it. It's in the Hall of Fame but maybe read it again listen to it again with maybe a little different attitude about it, understanding how important it is. I'll move on because we got a lot to do here. And again, this is a quick hit. I have 7 different topics here. So what is that, like 8 minutes apiece at tops, 7 minutes apiece? So quick hit on each one. And this is, what you call a soft topic, I guess. It's not about the charts. But the soft topics are the ones that eventually prevent you from making money. Number 2, understanding the proper use of relative strength, relative weakness. Now, this is something that's more of a technical concept, more on the chart, if you will. Where's the number 2? There it is. And again, this is not a training session per se, but this is something that is in addition to your exact strategy. Maybe in your trading plan you make reference to this. But relative strength or weakness can give you a good edge in some trades. It can also maybe negate some trades for you, which also gives you an added edge, perhaps avoiding or missing a possible stop out. It's not a hard concept, and again, tonight is not about trying to teach you this. For most people, it's kind of a common sense thing. But there are a lot of important things. When you say relative strength, relative to what? I'm not talking about a relative strength indicator, you know I wouldn't be talking about an indicator. I'm talking just about a visual comparison between your stock and the market. But what market you're looking at, if it even applies to your stock, and whether it's good or bad relative strength are all topics that you kind of need to understand to give that added edge. So it's not something you pick up off of your chart you're looking at or the charts you're looking at for your trade, but it's something that can give you an added concept. I absolutely, part of my everyday long-term day trading is something that I have out there under consideration all the time. So I mention it, and again, these are in no particular order, but I think it is something to increase your odds. And this is one that is not something that's been talked about a lot that I want to emphasize. This is kind of an ancillary and an extra one, something that we don't talk about a lot, but I think is a part of a good trading concept for any long or short-term trader. I'm going to go on to the next one, number 3. Understanding market timing and use of market stocks versus non-market stocks. Kind of threw a couple similar concepts together here, although they're not really the same. This also goes beyond your immediate strategy, understanding good, when, and when to not apply. It can complement or negate a trade. It often is common sense. Market timing is one issue, and again, this gets into more technical training sort of, but just as a little overview. Kind of says in a sense, well, if you want to go long something and you just found it and it's maybe 10 o'clock and the market just ran into yesterday's high, market timing would tell me, if it's a market related stock, to never take that trade right then, because even if it looks like my trade is about to take off, you have to consider the fact that A, it's kind of relatively weak if it didn't take off. In other words, do you really want to be trading a stock long that is lagging the market by that much? So that's one issue. And the other issue is if the market's about to fall for 30 minutes, which would maybe happen in the case that I just explained to you, why would you want to go long a market stock? Why don't you want to see what it looks like after the market drops? So again, this is a additional concept to whatever is on the charts about your particular trade you're looking at. And naturally, the concepts of relative swing market timing, these really only apply to stocks because there is no concept of market timing if you're trading the market or if you're trading futures. There's no concept of relative strength if you're trading the futures because you're trading what you're trading, right? So these two, market timing, relative strength, are not good old things I talked about a lot that I just want to emphasize. These are kind of newer things that I'd say are, to me, an important part of increasing your odds on any particular trade. So I went through the first 3 pretty quick, and maybe I'll be done quick today. I don't know, because it's kind of just a summary thing. But these next topics I want to take a little more time on because I think as I go on here, I'm getting more and more important. Now this one here, I'm going to get some flack on, I know, and I've always danced around this topic, and I'm kind of sick of dancing around topics because I think to the extent that I do that, I don't give people a full advantage of my experience, if you will. And this is going to be the advantage of trading stocks over Forex and futures. I want to emphasize again, I have no reason to say this other than what my personal belief is and where I think there's a huge increase in odds. I do trade futures sometimes. I chose not to trade Forex. I didn't see any advantage to it. And there are advantages to futures and Forex. I understand that. You don't have to tell me that. But there are advantages of convenience. In other words, the advantage of futures, there's different tax implications. Okay. It's very leveraged. Okay. No day trader rule. Okay. I mean, all those things are things that maybe you like because you're forced to need one of those, whatever it might be. A lot of people trade futures because they don't have a day trader minimum account. And maybe that's the reason you have to do that, and that's why you're doing it. But those are reasons of convenience. If you want to talk about odds, there are better odds in trading stocks. And you cannot argue with that just based on a logical concept. It can't be argued with. You can have a different opinion. You can like futures. I have nothing against futures, Forex. And it has nothing to do with what I teach. My seminar program is good for futures, Forex, stocks. So some of my people, did I see Glenn here? Some of my students trade just Forex and just futures. I thought I saw a couple of them here that do that. If you trade just futures, Forex, you've been through a seminar program, let me know. But that's great. I don't have a problem with that. But I don't think you can argue with the fact that stocks give you better odds. And here's the reason why. I've mentioned many times, and if you've been through the seminar program, you know, a big emphasis I make is that our job as a technical person, I'm drawing on the screen here, is not to be handed a chart of stock XYZ or whatever, and then say, okay, long or short, where's it going from here? I get that sometimes from people. Long or short? Well, there's another answer too, and it's called just leave it alone. I don't have a clue where it's going. The vast majority of charts you look at, if you're asked what to do with it, a professional trader would say what? A really good trader is what? You get a good trader gets a stock symbol from his friend. He says, hey, I just saw this symbol, long or short. What would a good stock trader say? Yeah, 97% of the time, real number, should say, I don't know. I don't have a clue. You can make great comments, right? You could say, well, if this, then that. You could say, oh, it has been in a nice uptrend. Oh, it just broke the uptrend. You can make a lot of comments. If it went under this, I'd maybe get out or short it, right? You can make all kinds of comments. But if tomorrow somebody said, hey, you got to go make $1,000 in that stock tomorrow, you'd be at a huge disadvantage. Does everybody agree with that concept? I'm trying to present it in a way that's kind of hard to argue with. You agree with that? Okay. So if you agree with that, the advantage the stocks have is that I look at like 1,200 stocks every day. You don't have to do that if you don't want to. You can look at 100. But if you look at 100, there's 100 different charts, right? And they all have different things. Like there's some setups on daily charts that I use for day trading. There's setups on the hourly chart I use for day trading. And then we have a gap list in the morning. And then we have a carry list of interesting things from prior days. And between all of those, I got to tell you, it's hard pressed that I don't have at least a couple, 3 things that I think are just great. Now, if we just all agreed that here's a chart, go trade it, if we just all agreed that's hard to do, guess what you're doing when you trade futures or Forex? That's what you're doing, right? Now, Forex, I know you have 6 pairs, but this is what you're doing. You're being forced to trade that. Perfect example today, right? Anybody from the room today? I'm going to get a sip of beverage. Anybody from the room today? What did I think of today's open? What did I think of trading today in general? And you may use expletives if you want. I'll censor them out. Anybody from the room? What did I think of today's trading day? Not good, right? Number one, the market had no way to properly judge it. Now you can make your guesses, and somebody's going to be mumbling under their, oh, Paul, I shorted the market today. I made a killing, and you don't know what you're doing. Well, that's fine. I actually gave a short trade call for the letter that I put out, but I also made, asterisk. It's a mess of a day. It's a huge rundown yesterday, a huge gap up today. There's no focal areas. There's no way to know. Very, very low odds to trade the market today. And then to top it off, we have, the Fed chairman talking at 10 o'clock. He was testifying at Congress. And when that happens, just the market bounces all over. You're in a trade. It bounces. You don't need that. You don't want it. I like boring trading. So to me, if you're trading the market, and not just today, but on a lot of days, there's a lot of days where I always look at the market. I consider trading it. I have a market bias every day, but that's a lot different. A market bias says, hey, if we run up for a half hour, I'm going to look short, right? I mean, that's the big general category that I use the market for. But what was great today, so I pulled up to the screen today, and number 3, I also really didn't like the stuff on my list that much. I didn't have that much great stuff. I didn't like the hourly and the daily lists I came with. So I get ready for the day, and looking at the gap list back in my head, it's 8:30, 9 o'clock, I'm getting ready to get on the mic with the room. It's okay, back in my head, I'm thinking, okay, there's a couple of gaps that aren't that bad. So we open, and there were 2 gaps that I ended up saying, hey, and this is exactly what I said to the room, and Brian, tell me if I'm lying. I said, hey, I almost want to just leave it open today, but there's a couple of gaps here that are okay. I'm going to take a shot at one. I was ready at my goal for the week, so I didn't want to lose anything on a day where I don't know what I'm doing. So I said, I'm going to take a shot at one, and I'll be done. But if it works, if that first one works, I'll maybe consider the other one, right? And I believe that's exactly what I did. So I put them on here for you just to show. Zira, and I did this really quick, so I hope I didn't screw this up. Actually, the other one was first, right? Yeah, JWN was first. And again, it was what I call a tier 2 gap. I didn't love it, but part of what goes into trading a gap is the entry you get. I got the right entry, just what I wanted. It wasn't ever going to be a home run. And I didn't make a killing on this. I think a couple of you in the room did. I did not take this one end of the day because, again, my thinking was today, if I make a little money, I'm happy, get out of here. I made the day's goal on this, made just under 1 hour. But since it dropped really quick, you can see I took target in 7 minutes or something, not what I have to do. But since it dropped really quick, it gave me the opportunity to take a second trade. And the second trade was a little better. Now, the second trade, I didn't put the arrows on here. I took it twice. I took it once, and it dropped a full R, dropped like a full day's goal, but I only took a third of it, and the rest trailed out. I was gone. I left at 10 o'clock, and I just checked in. It was 11 o'clock or something, 11:30. I checked in, and I saw that this had trailed out by a couple of cents, and I liked the setup again. So I just replayed this one. It wasn't like a new trade. I just replayed this, and this right away went to target 1, and the rest was target 2. So I made over the day's goal, and the point of this is just because this emphasizes so much what I'm saying, that to me this was kind of a piece of cake because I have these tools available trading stocks. So I want to just keep reinforcing that to you. And I know some of you maybe feel you have to trade futures now, or you have to trade forex, whatever it is, and that's fine. I'm nothing against it, but I'm just saying everything else being the same. The title of today is Increase Your Odds. If you're able to trade stocks, I think there's huge advantages to doing it. It is hard to argue with this because of the selection that you have. It's like if you're a football recruiter for the NFL and you have a choice, you can go to every college west of the Mississippi, or you can go to University of Las Vegas. That's your, what would you do? Obviously, the more you can see, the more likely you're going to find something you like, right? That's all there is to it. Any questions, comments, rebuttals on this particular topic? Because this next one nobody's going to like, but I want to give you some insight on this. This next one is one of these. I just want to give you some facts about this. The next one here is a blank is necessary part of your toolbox. Anybody know what this is? Anybody take a guess what the blank is on this one? A handle. That was a good one. I can't wait for you to get in the trading room. We already have like 2 comedians in there that, of course, are far below my level of comedy, but they're trying, and now we're going to have a third one in it. That was pretty good. Trading plan. Yeah, a drink is a necessary part of your toolbox. A margarita is a necessary part of your trading toolbox. Yeah, it's a trading plan. I know this is one of these where some people instantly shut down and close their ears, but let me just get a couple points across to you if I can. You can read the screen there if you want. Nobody can argue with the fact that this is important, because anything in life that's of value, whatever job, whether it's going to war, whether it's whatever, everything we do requires some kind of plan to move forward. You can't proceed in any business without plans, because it's your framework, it's your structure, what you're doing. And many people so misunderstand kind of the concept of a trading plan. I want to give you some amazing facts, if you will. They'll maybe help persuade you. Number one is that I so often hear from somebody, they'll send me some trades, and they've been trading a year or 2 years, and sometimes I'll make the comment back because I can't believe what they did. I'll say, could you send me just, not the whole thing, but just the excerpt from your trading plan that explains your entry? What do I hear back from? This is a real number. 96.4374% of the people. I just made that up. What do I hear back from most people when I say, hey, just send me the excerpt that that described this entry because I don't get it? Yeah, I ain't got one, but what's the entry? Yeah, right, exactly, Mark. Mark's getting. You ought to start teaching these, Mark. I'm working on it. Yeah, I'm working on it. Working on it for 2 years. I've been trading, losing money for 2 years. I'm still working on it. Why are people saying they're working on it? Well, at least the theory is that they want to write the perfect one when they write it, right? They don't want to waste their time now. They want to wait till they have the experience to write a trading plan, which is really very circular logic, because you'll never know what to write until you start writing one. Here's an amazing fact for you. I keep forgetting, I haven't looked, 250 or something trading plans in a folder somewhere people sent me over the years. Guess how many of those I wrote back, nice job? How many do you think? 250 trading plans, how many got a nice job back? And these are people that all waited. Yeah, no, two. Good guess, David. 250, 2 were okay. And these are all people that waited a long time to write them, right? They still stink. Here's the fact is that when you write a plan, it's going to stink. So what I recommend to some of our students is that you write your plan when you paper trade. When you start paper trade a couple days and just goof around, and then start focusing on what you want. And when you start asking yourself, what am I looking for? Just start putting that in English language. You don't have to get all fancy and look stuff up and use, just start off with putting in the English language. If you were trading for 2 weeks, and now you're paper trading, but you had to turn the reins over to your significant other or your dog, what would you tell them to do? That's all it has to be to start with, because what you start doing then is you force yourself, after a couple of weeks, you force yourself to follow the plan, and then you realize, wow, this is terrible because it didn't allow me to do this, or it made me do this, and you just keep changing it and changing. It's a work in progress your entire career. And the other amazing fact that I want to tell you is that I don't have any real hard numbers on this, but I just have to tell you that fairly frequently I get the email or the comment in the room sometimes or whatever, usually an email. It's like, it's a great email for me to hear. It's, wow, I don't want to jinx myself, but I feel like I made it. I'm there. My head lifted up. All of a sudden, all the stuff I've been doing, and I've been good for a while, and then I give it back, and all of a sudden, it just all came to me, bam. And every time I ask, well, was there something that really pushed you over the edge? And almost every time, they really like to say, you know what? I hate to say it, but after a year and a half, I finally decided to get serious and write a trading plan. And the minute I wrote that, I just started taking off. So when you combine those two facts, I can't explain to you enough how important it is. I know they're difficult to write. I nobody likes writing them. For you summer people, you have a whole thing on your resources page about tips on how to do it and everything. But it's really critical, and the most important parts are what most people leave off. No joke, I actually had a trading plan once. It was about 3.5 pages, and the strategy part of it was like 4 lines. It's just like, the rest of the plan should be 4 lines, and your strategy part should be 3.5 pages. It's just amazing what people do. This guy, I always joke about this, but it's not a joke. He was describing what time he makes his coffee and how many push-ups he does. All that's in his trading plan. When it comes to what he's going to trade, I'm going to find quality uptrends on a 5-minute chart and enter at the appropriate time. Sorry, mister, your plan is supposed to explain that last little blurb you just said. So believe me, don't believe me, but it becomes impossible to conquer the other elements of trading if you don't have a plan, because you can't correct what you do wrong. Anybody want to finish that statement for me? You can't correct what you do wrong if what? Well, exactly. You slightly different words, but the funny words I would have said was you can't know what you did wrong if you don't even know what wrong is. Yeah, exactly, John, right? If you haven't defined what's right or wrong, you take a trade that loses money, that doesn't mean it was a bad trade, but you got to look and objectively say, did I do that right or wrong? And the tendency for people is any losing trade, oh, I goofed up. I don't know what I goofed up, but I must have goofed up something because it's a losing trade. And that's not true. You have to be able to say, oh, yeah, man, you know what? I didn't look at the higher time frame. I didn't look at reversal time. I didn't realize that wasn't really support, blah, blah, blah. There ought to be definite, absolute things you could grade, just like you're grading a young person's math test, right? You should be able to go down and say, okay, boom, that's wrong. Here's why. 6 plus 4 does not equal 11. You can't do that when you don't have it spelled out. And just the process of writing the plan is like a total reboot for your brain to trading. And this is what a lot of people tell me. I know I went through this. I remember, I had just, tons of just stuff all over the place, notes on paper, on the computer, and here and there, and books, and blah, 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 and stuff cut out. And I said one day, you know what? I just have to synthesize all this. And I like Excel, so I pulled out an Excel sheet. And my basic thing was initially just to synthesize everything I know to paper. And that was a huge help for me. But something you have to get your hands wrapped around, whether you like it or not. These last two are a little longer topics, and that's why we're not really ahead of schedule. Any questions on trading plans? I know the big question is, how do you write one? I mean, obviously, the main components, the biggest things you have to have a plan for your money management, not chart management, but your money management. What are you going to start off paper trading? What do you move risk up to? When do you move it up? How often do you move it up? When do you move it back? What's your ultimate risk going to be, et cetera, et cetera. And then, of course, you have to decide what strategies are you going to go at. You should start off trading 1 or 2 strategies, and that's it. Keep it simple, and don't move up until you don't go on to other ones until you need to and or you've conquered these. The only reason you should have more than one or two strategies is because the possibility that your current strategies are infrequent and you want more to do. And then, of course, every strategy has to have a management component of how you're going to manage. It may or may not be the same for all of your trades. It probably shouldn't be. And then you're also your plan for how you're going to review and continue to make improvements based on reviewing your trades. All right, I'll let you guess at this one too. Nobody's going to get this one. Learn what it means to look for. I'm going to predict nobody's going to get this one correct. Learn what it means to look for. This is kind of a little more advanced topic. Unbridled enthusiasm is exactly correct. How did you know? Look for, nah. Well, I mean, targets, entry stops, setups, that's all basic stuff. This is an esoteric level above all that. Look in all the wrong places. Look for pictures. I want to take a minute to explain this one to you. It's something I go over with seminar people, and it's not a hard topic. It's an easy one. Yeah, all your answers are correct. I mean, those are all things. Those are all technical things. But here's what I want to explain. I think it's really a great topic for this group, because one of the issues becomes for people, I feel, is that whether you're learning from me currently, whether you are learning on your own, whether you're not learning at all, when people decide to learn something, whatever it is you're going to trade, right? If you're going to trade, well, some people don't. Some people just look at a chart and just guess what to do. But most people come with some kind of concept, whether it's good or bad or stupid or crazy, whatever it is. And they have a list, if you will. And if you take the DTS seminar program, in a sense, you'll have a huge list. People don't understand, though, Carl, what it means to look for a picture. And that's what I want to kind of transgress here and go through. If you come out of if you take the DTS summer program, this is why I explained it in the summer program. I mean, theoretically, you come out with a whole list of things. You say, okay, I'm going to day trade and I want to find 15-minute breakout plays or blah, blah, blah. Okay. And say, so I went through the summer and here's what I do. I got to find a weekly chart. I got to find a daily chart. Looks like I got to have a 15-minute chart. And then I have to check the extension. I have to check these two moving averages. I have to check this. I have to check that. I have to take market relative strength, relative time. And you end up with this whole list of things. And if you were to go scan as a new person, right? Pretend being a new person. You had to go scan and you really had a blank mind. You'd have to go through this whole list, right? And think about it. And we don't function well that way. As a matter of fact, our brains are not designed to function that way at all. Our brains only think in pictures. And I know some of you are bored of hearing this if you've heard me talk a lot, and I think I just did this in my podcast. But do you realize that our brains only think in pictures? We only think in pictures. Only. I'm not saying that we can think in pictures. I'm saying that we only think in pictures, which is really an amazing thing when you think about it. I can prove it fairly easily. No, we don't think in words though, right? We say words. But for example, when we're done tonight, where are you going to have dinner? What just happened? You pictured your kitchen table, dining room table, bar you're going to, right? You pictured something, right? You didn't have binary code show up in your mind. You didn't have words show up in front of you, right? And my favorite way to kind of prove this also is to do this, is I want you right now, if you don't do what I say, it's going to cost you $10,000. You have to do exactly what I want you to do is at all cost, do not picture a pink elephant. What just happened? See, if we had any mechanism to not think in pictures, you wouldn't have pictured a pink elephant, right? But you did. Everyone did. You can't help it. It's impossible to not do it. That's how you have to get to be as a chart reader, because what we actually end up looking for are strategies become pictures, more than you would know. And now, some of you who've been around a while, if you want to jump in here with me and convince the the people that are non-believers, believe me, it's absolutely true. When I scan, I am looking at 2 to 3 stocks per second. I'm not bragging. I bet you several of you here can do that same thing, and you do the same thing. But for those of you who are newer, saying, how could you possibly do that? There's like 50 things you got to look at on every chart. Well, it's very simple. The analogy I like to say is that if I handed to you, or if you handed to your 8-year-old daughter a picture book of animals, and said, find a giraffe, right? She could go through there as fast as she could turn the pages, right? Boom, boom, boom. But to somebody who has never seen an animal on Earth, if an alien landed here, you would have to describe what a giraffe is, right? And it would be a long list. Maybe a giraffe's a bad example because it's probably the easiest animal to pick out. But I mean, if your list said 4 legs and has teeth and 2 eyes, the person could have picked out 100 different animals, right? Because they'd have to go through, and at every page, they'd have to go through the checklist, all right, 4 legs, a mane, hooves, blah, blah, blah. But you know what a giraffe looks like because you formed that picture in your brain. Well, good chart readers develop that same skill. I'm looking for pictures, and I see them immediately. And so does anybody who has learned the right way and is in trading a fairly short time. It doesn't take a lot of time to learn that. So I really want to emphasize that that's also kind of goes back to the trading plan thing, that when you have the requirements you want, you get pictures. Some things to help you form that. Some things I suggest. Number one, when you find charts that are really spectacular, maybe print some out, or maybe get together a little PowerPoint presentation for yourself, right? And put, good idea, Mike. I wish I would have thought of that. and put them together, just to start, getting an idea. And better yet, when you have a chart you liked and you make money from it, print, because that has a huge impact on you. Print that out and say, you know what? This is the type of thing I like looking for. Now, there is no one magic strategy. That is what my podcast is just about. There is no one magic strategy out there. We all have the things we like best. There are technical concepts that allow you to trade different things. So you have to find that picture of what makes sense and what you like to do exactly. Good, Mike, right. And for people who've been doing it, they get it. But when you're new, it seems like a daunting thing in a sense because you're learning something new, and it's just literally this checklist of stuff. So this is what it says here is it's what links the material. It's what lets you say, okay, here's a list, and after a period of time, it all kind of comes together for you, and all of a sudden it's a picture. Now, I'm not saying that like in one day you just transform because you may start looking for the wrong pictures, but you'll start to realize that as you start to see trades or you get help or you show me a chart you did and I say, oh, wait a minute, you got something wrong there. Well, then you start adding to your mental ability to form that picture. That's, by the way, why I don't really like scanners. I do use a couple of scans, but I don't really rely on scanning. I look manually at the charts because it's kind of impossible for me to even envision a scan that would kind of pick up everything I'd be looking for. All right, any questions on number 6? Number 7 is the biggest topic of all. Your odds diminish to 0 if you do not have blank in your trading. And it looks like the word ends in an N. You ought to get this one. Egg McMuffins. If you don't have Egg McMuffins for breakfast, somebody already got it. The big D. That's right. Discipline. Discipline is such a far-reaching topic. It's like the roots of a tree. I mean, what a great example. It is the roots of the tree. It's the roots of your trading tree because it'll fall down without it, and it really permeates everything so much. And I know it's easy to just say, oh, have discipline. That's a piece of cake to say that. And it's kind of like, saying you have discipline in your diet and, just eat celery 6 days a week. The problem is people can't do that. You really need to develop the ability to have discipline is what you need to do. Oh, yeah, it ends in an E. Oh, I'm sorry. Discipline. It involves so much more than you think in discipline. First of all, in my view, I'm going to reflect back to the very first slide that I said tonight was not about. Tonight was not about just saying, hey, you got to learn technical analysis at an expert level. And I haven't mentioned it all night tonight. But a lot of things still reflect back to that. And having discipline first revolves around knowing what you're doing. In other words, you can't have discipline really when you don't know what you're doing in the first place. You don't have a structured plan of what to do. So it also refers back to a trading plan in a sense, right? How can you have discipline effectively where you're not even real sure what you should be doing? It's a bad analogy, but I guess how can you have discipline being on a diet if you don't even know what a proper diet consists of, right? You just flop around every day. Well, I'm not going to eat that. That's probably bad. I'm not going to eat that. That's probably bad. So there's no plan. There's no structure. Discipline involves, so many things. The way you get discipline really also is to build up that confidence. It's so much easier. Think about this. It's so much easier to exit a trade at a loss when you know you're a winning trader. Does that make sense to anybody? Yeah, that was that line just popped out of me out of nowhere. What a great line. Think about that in a minute. It's easy to exit a trade at a loss when you know you're a winning trader. Think about that. Does that make sense? And think about what that involves, right? I mean, if you're a losing trader, you're like, oh no, not another loss. I can't take it. Let me see if I can work around this. Let me see if I can do this. Blah 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 blah. Right? But when you're a winning trader, the attitude is, well, you know what? That's just part of a winning trading plan, a winning trading day, a winning trading week. As a matter of fact, now that I got that loss out of the way, I know the odds are the next trade is going to be a great trade, whatever it is, because it's just odds. It's easy to say and easy to do when you're a winning trader. So how do you get to be a winning trader? Well, you know what you're doing, you understand charts, you have the trading plan, you have all this stuff. So everything becomes easier. Discipline becomes easy when you know what the heck you're doing to a large extent. It really does. You cannot be consistent winning trader without knowing. Right, exactly. I mean, in fact, does it say on here? One of the slides says, I think one of the slides tonight earlier says something about you have to learn to lose, right? You have to learn to lose. One of the problems that very successful people in life have when they come to trading is that they're not used to losing. The more successful you are, the more you are, I've never lost, I'm never going to lose, 100% all the time, pedal to the metal, and you come to trading and you don't make that connection that winning doesn't mean never losing a trade. It means handling winners, handling losers, so you win at the end of the week, at the end of the month, whatever it is. Right, exactly, Mike. Yeah, I mean, that sounds like a quote from one of my other topics I did not that long ago, that no matter how great a trade is, it's going to lose sometimes. I mean, I can't even imagine a trade, Mike, like you said, where I would say this is an 80% chance, right? Of course, they're all aroused on what target you're going for. But I mean, if I have a healthy target, I can't imagine saying out loud, wow, that's an 80% trade to get to a 2-hour target. I can't imagine that. I have trades I love, but that's hard to say. But even if that were the case, odds just way beyond what I think are even possible, you'd still lose 1 in 5, right? And you can't get upset about that. That's just the way it is. But it all comes back to how do you have discipline when you don't understand all of these things? Discipline is simply the ability to do what you know you need to do. This is another way to look at it, right? The ability to do what you know you need to do. And I'm going to kind of breach this topic between psychology and knowing what you're doing, but discipline is doing what you know you need to do. And if you don't know what you need to do, it becomes an impossible topic, right? It also is where all the psychology problems start creeping in. And this is where something I mentioned a couple of times in the last 3 months. In that little, I think I'm going to email this again, but at the beginning of the year, I put a little thing as my 5 goals for the year in terms of helping people. One of them was kind of getting a better understanding of psychological problems. I think, amazingly, as much as I completely believe in psychology and the effect it can have on you, I think it's become a crutch for ill-equipped traders to claim when they have no right to. What do I mean by that? I mean, I'm running into people more often than not that say, oh, Paul, I want to get together with you. I know what I'm doing, but I'm having psychological problems. But guess what? They're not having psychological problems. They don't know what they're doing. They're just lost on a chart. And if you don't really know what you're doing on a chart, it becomes very difficult to not have psychological problems, right? Think about it. You're in a trade, and I'm in a trade, and I have a very good confidence level that this particular setup is going to take out yesterday's high. So I have no problem waiting for that. And if I'm wrong, I'm wrong. Say, okay, didn't get there. I got whatever, or it stopped out, or whatever happened. But I have great confidence to wait for that. But what if you had no clue whether the stock was going to rally 10 cents, $5, not take out? Then when it starts to go up and you say, great, I'm going to make it, then it starts to drop, what do? You immediately panic because you don't know. You don't have the knowledge. Now, we never have the knowledge to say with certainty, but we know well enough to say what the odds are and to know whether we should stick with something or bail. When you don't have that knowledge, you're confused, you're messed up. You blame it on psychology, but it's not psychology. Discipline is not doing what you know you need to do. If you don't know what you need to do, it's not psychology, it's poor training. Does that make sense? So let me just kind of re-summarize that so I don't give the wrong impression. I absolutely believe psychology can be a problem for people. But psychology comes when you know how to read a chart, you know the setups, you know your entry, you know what to do, and you find at the end of the day, you just can't do what you're supposed to do. In other words, you show me a trade, and you show me your trading plan. And boy, that setup was good, your entry was good, and you're supposed to do this to manage it, and you did something different. You did something different with your trade, and you do that day after day after day. That's a psychology problem. I don't meet many people that have that problem, to be honest with you. I meet people that claim that problem all the time because they don't really want to learn what they're doing. If you know what you're doing, psychology problems amazingly start to diminish. Golfers use this all the time, these serialization. Yeah, I suppose, Frank. I mean, I'm not, I'm a golf hack, but I understand what you're saying, yeah. Yeah, there certainly can be psychological problems, but you're right, most golfers probably just aren't very good golfers, right? So you use that for an excuse. Good, actually, it's a good example, yeah. Take responsibility for your trade. Yeah, another one of my big sayings across the board, take responsibility for your trading, absolutely. And just for fun, coincidentally, I was working on an email this morning, and you will this evening. It's done actually. I did not want to send it before tonight. I'm going to send you an email that has addresses the topic of discipline. What it is going to involve actually is what I call a discipline test. I'm sending you a discipline test. It really only applies to day trading. So if you're not day trading, it's not going to help you. But of course, discipline problems are usually a little bit less if you're long term. I'm actually done 5 minutes early. Let's talk. What do you have? Questions on anything? Here are the 7 in summary. Proper share sizing is a far-reaching impact. Understand the proper use of relative strength and weakness. Understand market timing and the use of market stocks versus non-market. Understand the advantage of trading stocks over forex and future. Trading plan is a necessary part of your toolbox. Learn what it means to look for pictures, and your odds diminish to 0 if you do not have discipline in your trading. Obviously, this list could go on forever, and I'm not even sure that if I looked at 100 things that this would be the top 7 necessarily. But these are 7 things that I think are important that either need to be emphasized or things that I had not really discussed a lot in the past. I confirmed I've learned some things already because I did not take a trade I was itching to do when the setups did not materialize after watching 3 different times. Good. Good, Mark. That's one of the keys, really, to being a good trader, to be able to. As a matter of fact, you're going to like with the email you get tonight. I think the title of it is Education Email, a Discipline Test. It talks a little bit about today and talks about a discipline test you can all take. Fun stuff. Actually, it's something I have made comments about before here and there, but I really haven't brought it, so it'll probably be new to most all of you, something I haven't mentioned in a long time. I think it's a great discipline test. And I bet you everybody fails it too. Yeah, oh, yes, absolutely. Yeah. If you're a DTS member, you're invited to these events, you get all educational emails. Yeah, you'll get it. You'll get out tonight sometime. It ought to come out tonight because I think it's done. I think I just held off sending it until after tonight. That's all. Your trading plan talk today was hugely helpful. Good. Thank you for those thank you for those who shared your thoughts tonight. I captured a lot of good stuff from you. Good. I've been making a list of what should be a trading plan and how your trading should be written so someone else can follow. Okay, great. So, Rob, you're in the summer program. You know there's a video about this on the resources page, right? Just double checking. I'm sure you know that. Thanks, Tasha. Thanks, Jack. We'll see you tomorrow. Cool. Yeah. Yep. I agree totally, Mike. That's all part of. I've always felt and do teach that. Actually, the second course that I teach just focuses a lot on how to improve by reviewing your trades. As a matter of fact, one of the things it doesn't come up a lot in the free events, but here's something shocking for you. There is no such thing as back testing. You get these software programs that back test strategies. Complete waste of time. Complete waste of time. There's no such thing as back testing strategies. You can do it, but you'll never make a penny doing it. What you want to back test are the trades you took, and you want to back test them to find out if there were better concepts in terms of entry, management, whatever it was. That's what makes you money. not backtesting software programs because it's too much to go into now. But I guarantee you it's 100% waste of time to use those. Yeah, journaling. I don't know if I like the term journaling. I like statistical review. I'm not against like writing comments, if that's what you mean by journaling. But the problem is if you just kind of write comments about things, I mean, you need to review your trades, yes. But I like a statistical review where at the end of the week you can summarize, in numbers more or less what you did right or wrong. The problem with a whole string of comments at the end of the month is you can't synthesize, average out, analyze your comments. You got to go back and reread them, and I think it loses some. So I'm fine with comments being there, but I think the statistical analysis is what's most helpful in your trades. Right, review and analyze. Okay. Journaling has two meanings. It can mean kind of review and analyze, or it can mean some people like a diary type thing for your trades, which I think should not replace analysis of the trades. Right. What data is needed for a trading log? Oh, you mean your trade analysis, John? Well, that can get a little involved, but basically, you have your trade and you have your enter, your stop, your target, where you exited, right? You have all those numbers. And from those numbers, you can start to get lots of great information. For example, there's something called like your batting average, right? How many trades did you get right? There's something called your Sharpe ratio. What was your average winner compared to your average loser? Very, very valuable information. I even like going as far to say is, if you're day trading, how much money did you make on Monday versus Tuesday, Wednesday, Thursday, Friday? How much money did you make the opening half hour of the day compared to the next hour, compared to lunch, compared to the end of the day? How much money did you make long versus short? What was your market rating each day such that I like to categorize the market as being, and I give it a number rating, up in a continuing uptrend, up reversing a down day, down in a continuous downtrend, or down reversing an up day, or the last one being just sideways in a sideways pattern. And then you try to correlate your profit with the market expectations. You just go on and on. It's a matter of how much you want. I also love tracking, John, what I actually did in profit compared to what would have happened if I just took an all or nothing mentality. And also what would have happened if I took all my profit at target one, kind of both sides of the spectrum. What if I was tighter? What if I was looser? Great information. You learn from that all the time. You shouldn't be even really trying to trade with real money until you're tracking stuff properly. I've learned, to me, that was one of the biggest things that immediately, but back when I started, there was nobody telling me this. I mean, the education was kindergarten education. I was this type of person that I just liked Excel and tracking stuff, and I just instantly started doing all this stuff, and that's where I learned. I learned really like everything, so much from tracking everything that I did. I won't throw you up, Lope. What about bots? Do you have a question? Bots are automatic computer programs that either run in chat rooms or run in the market. Do you want to use a bot for trading? You mean you want to use a black box type of thing? You want to use software for trading? So, Lope, you want to use a bot to trade, you're saying? Tell you what, go try a bot for trading and then email me in 30 days and then tell me what you want to do next. There is no bot that works for trading. There never will be. No, seriously, it'll be a waste of time. Hey, Lope, let me convince you this way, kind of through the school of common sense, I like to say, right? I trade every day, and I want to do nothing more than improve my trading, right? I have no ulterior motive for not liking a bot. I could work that into what I do, whatever it is, right? It's a waste of time. It's a waste of time. Because, I mean, at the very best, you're going to end up with bot versus bot, right? It's like I want to win my chess game, so I'm going to use a computer, but then your opponent uses a computer and uses a standoff all the time. But bots aren't going to matter. AI is not going to matter. None of it matters. When you know what you're doing, none of it matters. We just look for those. Look at the two trades I did today, right? It's got nothing to do with bots. It's got nothing to do with AI. It's got nothing to do with anything. It has to do with the fact that there was a chart that when it opened, I knew there were a ton of people that had to sell. So I took advantage of that. That's what it's about, finding charts like that. The balance between people that have to sell, that want to sell, that have to buy, that want to buy, and finding that balance. That's what you want to look for. Lope, you've been around a while, and you know my answer. If you want to improve, Wait, what's an analogy? So Lope, you want to be a professional boxer, right? So I'm just looking for a few things to learn, how to do a few things. And you go in the ring and you get flattened. I mean, you don't go in the boxing ring until you're an expert, right? Until you know what you're doing. I mean, either learn what you're doing or don't. If you want to learn what you're doing, I mean, you know what I'm going to say. I teach you what to do. You haven't wanted to do that for years. That's fine. But you can't say to me, well, Paul, I don't want to learn from you. What should I do to learn? I mean, you either have to learn what you're doing or stay away from the market. Nobody learns on their own. There is no improving, Lope. You either learn what you're doing or you stay away from the market. You got it? Now, I don't care what you do. Doesn't matter to me what you want to do. But there is no little cheap way to just figure out what you're doing. It doesn't work that way. The market's the market. You got to know what you're doing or you get slaughtered. Is that true, everyone? Is that true? Learn what you're doing or stay away because you're just going to get chewed up and spit out. 95% of the people do, Lope. So, I know you've been around a while. I know we chatted before at some point. I don't know what we said. But, when you're ready, commit and learn what you're doing. Until then, stay away. What I do recommend for people is that if you are just, kicking the tires for a while, if you want to get really involved in DTS and not get to be part of the seminar program, which I fully understand, not everybody's ready all the time, become a platinum member. Tons of benefits. It costs a little bit of money one time. And the reason I kind of started was because for people who are looking around, it kind of keeps them in the fold of DTS. There's more information. There's more information to learn there for a small price than you'll find anywhere on the internet in terms of useful information. And you get to know and understand me and the way I teach and the way I trade and what I do. And then when you're ready someday, great. If you don't like that, that's fine. But there is no other answer to me in terms of trying to piecemeal it. I've seen person after person try and fail. They just can't. Learn it or don't learn it. Anything else, guys? This is the longest aftermath I've ever had to a presentation. Thanks, everybody. All right. Take care then. We will see you next event, whenever that is. And if you're in the room, I'll see you in the morning. Have a great night, everybody.